Hello students. So now let us understand a case discussion on Yes Bank. Okay, since we discussed about the investment process, okay, what is investment, what are all the investment process, and related to that investment, we are going to discuss the case now, which is related to S Bank. Okay, so it was happened in the period of 2018 to 20. Okay, so anyone can you read this case? Yes, please.
Many small investors in India put their entire savings into Yes Bank shares because it was once considered one of the fastest growing private banks. In 2018, Yes Bank's share price was around 400 rupees. By 2020, due to mismanagement, big bad loans, and government issues, the shares price crashed to 10 rupees. Thousands of retail investors who had put all their money in Yes Bank lost over 90% of their wealth. One of such case was reported in the newspaper. A middle class investor from Pune had invested 5 lakhs, all his entire savings in Yes Bank shares. Within 2 years, his investment value dropped to less than 50,000. Later, financial advisors guided him to rebalance by investing in mutual funds and instead by individually risking stocks.
That's it. Yeah, that's it. Yeah, right. So it's a very small case about S Bank retail investors. So, of course, you all know S Bank is Indian private sector bank. Okay, its headquarters is located in Mumbai. Okay, and this bank is offering lending services to many corporate clients, MSMEs, retail investors, so many people. So this is what the service provided by S Bank. Okay, so what I'm telling here is at 2018 share price was rupees 400. Okay, by 2020 there was some problems which was happened inside the Yes Bank, like mismanagement, bad loans, okay, governance issues, all these things. Because of these issues, price was crashed to rupees 10. Imagine that from 400 it was declined to rupees 10. Okay, so what happened now? Thousands of so many retail investors are there where they invested their money in Yes Bank. Okay, almost they lost 90% of their wealth. Imagine 90% what they invested, they lost everything. Okay, so at that time there was a report, you know, uh, was happened. Case was reported in newspaper like a person investor from Pune where he invested around 5 lakhs. 5 lakhs, all his retirement savings. That amount was all his retirement savings. Okay, he invested in S Bank shares, and 2 years, within 2 years, what was happened? The investment value was dropped to 50,000 from 5 lakhs. It just dropped down to 50,000. Okay, so now what was happened, like many financial advisors guided him about mutual funds, about FDs, about gold. Okay, all money in one company, just don't do that. Investing all money in one company is the biggest problem. Okay, all these things was the guidance given by the financial advisors. Next 3 years, again gradually, okay, he can able to recover his money. He has only 50,000 now, can able to recover. This was a very simple case. Okay, so this is what the thing what we studied in investment process also. Okay, so investing every money, all the money in one single company, one single portfolio is actually very, very, very dangerous. Because if that is what crashed, everything, every money will be lost because of that decision which is what taken by you. Now let me ask you simple questions. Okay, what mistake did the S Bank investors make? General question. Any mistake that they made? Just now I told you, right? Don't invest money in one single company. Don't do that. Okay, one company shares investing on. What he did is, and he just invested all 5 lakhs in Yes Bank. Right? That is the biggest problem. And next is, what investment principle did they ignore?
Understanding the company's growth.
There is a term here also, it is here under portfolio construction. What is that? Diversification is the principle where all the investors they failed to do. Diversification. What is diversification? Invest in everything. Invest in mutual funds, invest in gold, invest in bonds, debentures, invest in everything so that diversified securities will safeguard you actually. Okay. So that is what a principle that investors failed to do. Diversification. Okay. So next is, if you were one of these investors, what would you have done differently?
Diversifying my portfolio in different stocks.
Yes, only portion of your savings that you can invest in Yes Bank. Remaining, obviously you take a clear decision, right decision, invest in somewhere. Probably you cannot able to lose all the 5 lakhs as like him. Okay, which is what dropped from 5 to 50,000. It's a very big loss, right? Okay, that should be avoided, and proper analysis that you can make before investing about any company, banking sector or whatever. Okay, proper analysis that you should make, right? So that is the thing. Okay, so what lesson that can be learned about the investment process from this case?
Selection of the investment and diversification of the investment.
Right. We can also use one more word as research. Research. What is that? Research is what? Searching again about all these things, about market, about industry, about company. Okay, if we research, if we do proper research about all these things, probably you cannot able to face a heavy loss in the near future. Okay, so that is the biggest lesson, and don't put all the money in one stock. That is also the very big lesson. Okay, so how did diversification help investors recover later? Diversification, discuss this term, right? Help investors to recover later.
If one company goes down, automatically the other ones will go down. They stay basically.
Yes, very right. No, very good. Like FDs, there are FDs, stocks, gold, mutual funds. Even if you fail in mutual funds, you can gain in gold. You can gain in stocks. So this is what the biggest thing, right? So stable growth is what diversification will actually helps you when you're acting as a, being in a financial field. Okay. So this is how this investment process helps for this case to understand more about this. Right? Thank you.